All right. Good afternoon. Welcome to a New York session. I hope everybody is doing well. Okay, so today is the last trading day, not of the week. I thought not the month because we have Monday, but to me this is the last day of the week and then the last day of the month because Monday probably we might not get much in terms of price action. So let's go and check how the monthly candle looks like. So this is how the monthly candle looks like, right? It's closing as a bearish candle. And looking at how we've kind of shaped, I spoke about the fact that this is a range and price is likely going to go up, but at the same time, this high to this low, that's also a range and price can continue going down. Hence, if this month is closing as a bearish candle, there's a high probability next month candle can be bearish, or there's a probability it can be bullish. Now, that's going to depend on one thing: the quarterly, the 3 months, how the 3 months is doing, and then also the seasonal tendencies. So if I go to the 3 months, right, you see, let me remove all this for now. You see that we have this candle closing above that. So that's a change in the state of delivery on a 3 months time frame. But the 3 months is ending as a rate above this high, right? So that means there's a high probability that the next candle can take out this low on the 3 months basis, right? So going into the month of April, there is a high probability that price will come back for this low. Okay, now that's based on the logic that I've shared over the course of the 3 months now, where if a low is taken, a high will be taken, and it applies on every time frame. So if a high is taken, a low will be taken. If a low is taken, a high will be taken. A high, low, right? So that's the logic we're going in with on the for next month or the next 3 months. That means if you go back to the monthly time frame, then this low is likely going to be taken, right? So that gives us an idea going into next week. And that's where this gap becomes important. So as long as this gap is open, price is likely going to come back down here. Then inside this gap, something can reject price. Now, we've had 2 weekly up candles. That's normal. We can have 2 redistribution candles and then price will drop. So going into next week, I would want to see 1 candle wipe these 2 up candles. And if you go on the daily, it's probable because there is no fair value gap, and I have an example on here, which is Ripple. I'm sorry, not Ripple. Hype. Hype did not have any fair value gap whilst it was going up, right? And you can see how quick and aggressive price came back down. That is something similar that can happen on dollar index. So this gap here, this daily gap, at least the 50% of it right, the 50% of it is likely going to reject and send price back down again. All right, or even probably we might not even get there because we want it to stay below the 50% of the fair value gap. Right, so it's either they'll go back up, take out this side, and then drop down again, or they will just drop. That's what I'm anticipating. Okay, then we can drop down to the H4 and we can look at this price level and then that price level. These two price levels are very close to the 50% of this gap, and then also close to the 50% of the weekly gap, which is this one here. All right, so let's see going forward what we're going to get. But for today it looks like we took out the previous day's low. We took out the previous day's low, so price is coming for the previous day's high. All right, so we are coming back up here from the daily perspective. So let's see, that will give you an idea on the foreign currencies to take out previous day's low. So Aussie is likely to take out these lows here. Euro is also likely to take out the previous day's low. Pound also likely to take out previous day's low. And then New Zealand is already taking out previous day's low. But in all, like I keep saying, I like this one, okay, because the order flow is still bullish. They're sustaining the down candle here. So if we get the dollar index to start rejecting to go lower, we are going to be looking at this for a potential move to the upside. On the H4, right, this gap has been holding till now, right, and there's another one just below it. So in case dollar index go for that level that I'm talking about, then they can take out all these lows, dip into this, and then reject and go up. Anytime it's going up on the H4, check and see, because if you've noticed, it's not printing any fair value gap when it's rejecting. So that's what I'm actually waiting for, because anytime it pushes up, it does not leave any fair value gap, right? It's not leaving a gap, hence that's why it comes right back again. And then pay attention to that, because it's an indication when price is pushing up or pushing down without a gap. It's an indication that price is not ready. That's the business on the dollar in regards to the foreign currencies. Apart from that, if you look at the crosses, I'm looking at Aussie CAD, I'm looking at the New Zealand CAD, and then I'm looking at the think you pound New Zealand. So pound New Zealand, that's why I wanted to see them go and reject, and you can see it's actually rejecting. I would want to see them come all the way back down again to take out this low and then potentially these ones, but I want the daily to start giving the confirmation rather. Okay, So the daily needs to give us a confirmation, and then we start coming back down again. So maybe next week or this week we will reject this high. Then going into next week, you're gonna anticipate price coming down to attack this low, essentially here. And then we will see. For now, if this week closes as it is, you'll be looking for a run for this low. The Aussie card, it's waiting for a buy. So let's see how that, because the daily is still yet to close above previous day's high. The same thing applies to New Zealand. Yesterday we nearly closed above it, and then price rejected. So and you can see the whole week we've not gone anywhere. This is Monday, this is Friday. We've spent all week inside this range. Okay, so let's see how we get on going forward. The other crosses, I don't I don't like them for now, so let's focus on these high probability ones. Let's move on to gold. Now, the reason why I'm not doing much, if you've noticed this week, is because it's the last week of the month, right? And the last week of the month, you really want to be careful with what you do. It's not just a normal trading week where you're gonna go in and expect the same sort of price action. I think by now, if you're here, you will know that every single month has a closing candle on the weekly time frame, and that weekly closing candle can be a pain to trade. I think some of you probably have noticed that on gold this week, right? Monday, Tuesday, Wednesday, nothing. And then all of a sudden, Thursday, yesterday, price shot up. And then today, who knows? Maybe today it will come back down again. I'm not suggesting it will, but who knows? Maybe it will come back down again. That's why you just need to be careful. Even though I anticipated them going up here, right? Because of this gap. But trading it is different. There was no indication that price was going to do it, apart from after we went above this high. Okay, after we went above that high, that's when price gave this big push. Okay, so let's see how price is going to develop over the course of today, and then next week we will see what we can do. Now, April is a good month. It's better than January and February, and the first week and the second week can be a pain, but we will get through it with experience, right? Why am I saying that? April will begin the new 3 months, the second 3 months of the year. So this will be the first 3 months of the year, and then the second 3 months of the year. So when the month starts, okay, there's going to be a potential manipulation for the month. Okay, there's going to be a potential manipulation for the month. If we're bullish, we can likely go down first and then go up. That would be the first week or the first 2 weeks of April. So in my experience, the first week can be a little bit dodgy on April to trade, which is next week. So again, the recommended type of trading will be scalping and day trading, or preferably scalping, get in, get out. Right? Don't try to buy or sell and hold for the week or hold for some period of time, because there's going to be that sort of manipulation. Hence, if you're looking to trade going into next week, just be mindful. I'm just giving you heads up. The same way the 3 months new candle is opening, it's also the beginning of a new month. So again, that month manipulation can also take place. And on top of that, that new month is going to have its first week. That first week can also have its own manipulation. So it's 3 potential manipulations which can take price up, down, up, down, up, down. Because the weekly manipulation is different, the monthly manipulation is different, and the quarterly manipulation is also different, all affecting the first week of the month. I'm sorry, the first week of April. So just be mindful and then trade with scalping ideas going into next week. And then one last thing before I move on. When you're trading, I think this came to my attention this week when I was teaching one of my students. When you're trading, always make sure that you have a goal. That's something that most traders don't have that, and they just trade. If you're trading and you don't have a goal, then what are you aiming for? Is your aim just to, I don't know, take good trades? What is your aim? Right? You need to have an aim so you can aim for something in the market. Without the aim, you're going to be looking to trade and trade and trade and trade and trade without being fulfilled. Okay, you're going to trade and trade and trade and trade without being fulfilled. So you need to have at least 1, a yearly goal, 2, a quarterly goal, 3, a monthly goal, 4, a weekly goal. Okay, what are you looking to make in the whole year? What are you looking to make in a quarter? What are you looking to make a month? The yearly goal is going to be in the form of an idea. That's roughly what you want to make. It doesn't mean you're going to make that, because the year is long. It's a long period of time. So if you think you can aim for the yearly goal, then you might miss it. Why? Because if you focus on that yearly goal, there's a high probability you're gonna trade differently. The quarterly goal too is also going to be an idea. You're gonna aim for it. It doesn't mean you're gonna get it. You can get more than that, you can get less than that, but that's a goal, something you're striving to get or achieve. Then you have your monthly goal. Now your monthly goal is what you need to actually be focusing on, because the month is just 4 weeks. So you break that monthly goal into weekly goals. All right. You break that monthly goals into weekly goals. And once you break into weekly goals, it gives you an idea. It gives you an idea on what to do on a weekly basis. I'm bringing your attention to why, if you even scalp next week, you'll be okay. Because that monthly goal is achievable. You can break it down to weekly. And then on a week, you can decide how many trades you're going to take to get that weekly goal. For example, the yearly goal of an average successful, I would say, quote unquote, hedge fund. Okay. Now I'm just bringing the hedge fund as a reference point. It doesn't have to be, I would say, the same, but it can be a target or an aim. Because if a hedge fund is aiming for that, how much more you, right? How much more you? Because they are dealing with huge sums of money, and they are the ones that most of the time are profitable. Now, because they are dealing with lots of money, they don't aim for too much. They don't go in wanting to make 100% return. That's if a hedge fund is making 100% return on their performance, I think that everybody needs to send their money to them, but they don't. The average hedge fund aim to make at least 20 or 30, maximum maybe 40% return, because that return on top of the amount of money they're dealing with is enormous. It's huge. Imagine you're trading let's say 1 million. That's as an example, right? If you're trading $1 million and then you make 30%, 40% of that in a year, that's 300 or 400,000. If you trading, I'm using random figures. If you trade in 10 million and you make 10%, if you make 20%, that's like, I think, 2 million, right? So if someone has 10 million and then they make 2 million in a year, that's incredible return. But the average trader with 1,000 pounds, or the average trader with, let's say, 10,000, if you make 40%, that's like, let's say, 4,000. But it doesn't look great when you're using small figures. But that's how trading needs to be looked at. Okay? It's not supposed to be looked at the potential that you can make big money, because the potential is there, but it's a two-edged sword. It can go both sides. So that's why hedge funds, it's a trap when you read online and people say risk 1% of your account to make 2%. When you risk 1% of your account, what you're doing is you think that the market is always going to be in your favor, so why not? But I bet if you go and you ask hedge funds how much they risk in their trades, they will never tell you it's 1%. That 1% or 2% is a trap to make people think you can make money quickly in the market. Hence, the average Joe, is going to risk 1%, 2%. The moment you get a drawdown, psychologically, it's going to impact your performance. It's going to impact your performance, and it's going to give you anxiety of wanting to get your account back to where you were. It's a human thing. Okay, it's gonna give you anxiety. It's gonna give you I don't know. It's gonna give you this desire to make it back and make it more. Hence, you're gonna start trading differently. Unless you are disciplined in mind, you're gonna start trading differently. Okay, so I'm bringing this up so that you put trading into proper perspective. Okay, you bring trading into proper perspective and shape your perception about what you really want to do in the market. All right, because if you don't have this idea, the P&L that you always see on your chart, it does not equate to you being quote unquote profitable all the time. You've seen how the market moves, right? You just want to dive in and out as quick as you can. Okay, you just need to dive in and out as quick as you can. All right, I think a word to the wise is enough. So let's move on. All that I'm trying to say is put trading to perspective. Don't aim for too much. Just have a goal, weekly goals that will point towards your month, and that month how you make towards the end of the month will then point how you're gonna make it for the quarter, and then it'll point to how you're gonna make it for the year. So if you choose a number that is achievable, that is gonna help you limit. It's gonna help you not want to overtrade. It's gonna help you shape the way you see the market, and then over time, it's gonna help you be consistent. Okay, let's move on. All right, so crude oil, gold, like I said, is getting to the end of the month. Now, can gold continue going up? Absolutely. I think all that this did was a consolidation, and then we moved up, we accumulated, we moved up, we've accumulated. We can go up one more time, and then a pullback is possible. Now on the daily, it's printing a down, up, trading above a high. So we can have one more up and then we come back down, or we can have one more up and then it reaccumulates again. So today, can you buy? I think you can. You can buy to continue going up. Just make sure your stop loss is nowhere in here, because it can pull back in there and continue going up. Hence, again, depends on how you want to trade this. You can use this gap as your protection. Put your stop loss below, so your stop loss can go below this, and then expect them to continue going up. Crude oil, I think they might go for this high because price has shown no willingness, it wants to break down. So I think they're gonna go for that high, maybe tomorrow. Monday, or maybe they do it today. So expect crude oil to trade somewhere in here. All right. ES, I think ES has done very, beautiful. That's what I wanted to see this week on ES, but it didn't quite trade to where I wanted them to trade to before coming down. H4, this is where I wanted them to trade to before coming down, but it didn't do it. Going into next week, looking how the week has ended, it's taking out the previous week high. It's also rejecting the gap. And I spoke about this 3 months candle, right? Monday is going to be a very, very important day. I will not be surprised to see Monday wipe out all of these. Okay, I'm putting out there first. So if you wake up and you see ES down here, don't be surprised. Okay, Monday can wipe everything out. Monday can wipe everything out, and then we might not have this holding as a gap, but it's yet to be seen. That's just speculation. So let's see. But based on how the weekly is going to close, unless we go back and close above this high and the volume imbalance, we are likely going to go down to attack a previous week low, which can be this one and that one. So next week we'll be looking for a move down. I like the gap that has been left yesterday. That's going to be where next week I'll be anticipating a potential high to form. It can form here or inside this volume imbalance, and then we look for this equal low. So that will be your draw on liquidity going into next week. That equal low over there. Okay, it's too clean. That equal low first, that's what it's going to be, and then we will look for maybe Monday to take out a high and then we drop a H4. It could be this high. All right, So let's see. Today I think it's too late. You can see we've traded back to this up candle and then price is rejecting. So that's, if we had another day, let's say today is Thursday, tomorrow being Friday, I would say this would be the trade to take. Selling this and then look for a continuation to the downside. That would be the trade to take, but a bit too late for now. So that's what you want going into Monday. If it takes this high out, just look for another rejection and then you sell to attack this equal low and to drop in here. Okay, that's about it. Let's go over to cryptos. So cryptos, I think apart from AI, because AI we know we are gonna be holding Solana. I've left it there, and so far so good, and that's where we're going. BTC, same thing, run up, rejection, that's where we're going. Ethereum, that's where we're going. Hype, that's where we're going. XRP, that is the one that I didn't want to anyone to sell. Still the same, right? Let me get rid of this because that didn't happen. It's still the same idea. The month is closing as a rejection, right? We rejected that, we went right back up. So let's see how. Okay, I think we did not take out the previous month, so this is going to make it challenging. Let me look at the 3 months. Let's see what they are likely going to do. So based on the 3 months, that will be where price is gonna go. Okay, so the 3 months is ending now. Every close of every single candle needs to be re-evaluated. Every candle close, you need to evaluate how that candle closed relative to the previous one. That's why the high time frame price action is crucial, because what I'm showing you here right now, if you're not aware that the 3 months has rejected this as it's doing, and you focus only here and you focus only here, you might not understand what is happening. Okay, you might not know what to do, but looking at the 3 months candle, we can apply a very simple logic here. What is the logic? We took out a previous candle high, rejected, we are likely to go for the candle's low. So even though this rejected, this month could not go all the way, because that's what I was expecting, to go all the way up and at least trade above this candle's high, either to close above it or trade above it, and that would have given us a different perspective, but it couldn't do it. Hence, this law is going to be a drawn liquidity. So on the weekly, you can, going into next week or next month, look for the weekly candle to start dropping to trade here, and that gives you a high probability trade direction now than before. Because before, to me personally, that would be gambling, it's speculation to go down, but now I can say we are likely to come down here, and then once we get there, we will see what is going to happen. It depends on how price will trade here on a weekly basis, but ideally I think it will reject. but it's yet to be seen. Okay, it's yet to be seen. So let's see how the week, even today's Friday, so we got Saturday, Sunday, Monday to go, 4 days to go. Anything can happen. So let this 3 months candle close, then we can say this is the draw liquidity, and you can, look for a trade idea to go down there. Next one being Chuo. Let's see what is happening. Okay, so the gap couldn't sustain. The gap couldn't sustain, so it's gonna make one more low, and then we will see. It's gonna be hard to know what's gonna happen next because there is nothing here. So again, do not sell it once we are below this low, because it can give you this kind of rejection one more time. I'd say it's good. It's good movement. Why do I say that? Because that's how you want smart money to come in. Smart money coming in looks like the elephant in the room, with big trunks down, with big trunks up. If you pay attention to the pattern that I've shared with you, the movement up is just one aspect of it. The movement down is key to understanding the movement up. If the movement down does not have the pattern, which is the up, the down, down, preferably with a gap. Okay, the movement down, down, preferably with a gap, and then a quick rejection with also a gap. That is the ultimate. Go back in time and then look at every reversal, like when price actually reverse, and you see this one, what I'm sharing with you right now. Every single reversal, you're gonna see this. You might not see it on a specific time frame, but it is there. Maybe on a monthly, you might not see it, but it might be on the weekly. You might not see it on the weekly, it might be on the daily. But every single reversal has this one. So that's what I'm saying. This is good because it's printing that, and then we will expect that. But I don't know, because where we are, there's nothing. There's no price action to say they're going to buy here, they're going to buy here. So it's going to be one of those instances where you just have to wait, sit and wait for it to happen. But personally, do not sell it. Chachki. So that same thing applies to Chachki. Okay. This is how I'm looking at. But even though this one, we have these small mini candles here. Let me find a good price action to represent what I'm trying to say. These ones have just few candles, so we don't have enough data. See if I can find one. Okay, let's look at this buying that happened right here, because that's how it looks like. Okay, there. This one doesn't look great. Okay, let me zoom in into this particular buy. this down candle on the H4, because I want to paint a picture in your head on how this, there you go, that apart from this down candle that made itself in here, notice the up is down, down with this gap, and then we're going up with that gap. This is the pattern. That's the ultimate. That's what you're looking for. So if you pay attention to the red candles, the green candles, within that you see this pattern. Okay, within that you see this pattern, and that's what you're looking for when price is reversing. Okay, within that is the reversal pattern, because that's what you really want to get to buy, to reverse price. All right, so let's see how going back to Satsuki. It looks like this one, right? As I was looking for one, this one here, the up, the down, down with the gap, and then movement up. So this is looking good on the H4, and on the daily, not so great, but it's okay. It can give you a nice day trade when we get there. It can give you a nice day trade in here, but I wouldn't do much with it. Why? Because I wouldn't expect price to come all the way back here. That's extreme. It can do it, but that's extreme. So maybe a day trade or a scalp when price hits this level here. That's the up candle. That's a breaker. This is also a breaker, but I like that one. This candle is within that. So once we touch this candle's high, or this low to this high, 88.6, that's the level to watch. So expect a move down again to this level, and then when you get there, drop down to the H4, look for a run below H4 low, rejection on the M5 or M15, and then buy, look for 221, and then be done. That's it. Don't look for more than that. As it's dropping now, this run above this high, drop down to the 5 or 15 minutes, wait for it to break here, then sell the breaker. I'm kind of to go down to that level, right? Okay, so that's pretty much it for me. Let's go back and look at the dollar index. Okay, I think the CAD, the New Zealand CAD, the New Zealand dollar, Aussie CAD, and Aussie dollar is moving, but it's too late for the week, so let's wait till next week. But pay attention to the narrative that I've given on the dollar index, because based on what I'm seeing, the 3 months is ending as a rejection. That is our main focus. It's ending as a rejection, so they are likely to go take out a previous 3-month low. And on the weekly, we have this huge imbalance. So again, most of the time, this kind of imbalance is very, very hard for price to trade through them, right? Something like this. We trade to it, and then we drop down. Swing, one up candle, down again. That's what we're looking for. So that will be all from me for this week. Enjoy the rest of the week, and I'll see you on Monday. Hopefully we'll get some maybe decent price action for scalping. Remember, it's going to be scalping. I'll see if I can get some scalp later on this afternoon. Yeah, I'll see if I can get some scalp this afternoon. All right, have fun, enjoy. I'll see you Monday. Take care.